Good afternoon, everyone. We just got the Fed this morning at 4:30 a.m. today in Australia. Very interesting. As I talked yesterday on the webinar, widely expected already. The interest rates decision was maintained at 4.5% as the consensus, so no changes at all. But what was most interesting, and what I've been talking, long time already, is about the press conference. Okay, it's about what Jerome Powell say. It's what about Jerome Powell states, and it goes like that. So, but before we get into that and dice all of those things for everyone, I've kindly asked for you to subscribe to the channel and give us a thumbs up, and that way, basically, you're showing that you're liking the video, and you're showing YouTube as well that the video is a good quality, and YouTube can share to other of the viewers as well. And that being said, don't forget to join the Telegram. Telegram link is on the description, so you can just go into the description and click into the link and you'll be redirected to the Telegram. And also, we do have a webinar today from 4 to 5 p.m. in Australia, so make sure to be into the Telegram because that's where I send the Zoom link so you can join for free into the Telegram, okay? Cool, that being said, let's get to the video. Right, so first thing here is, as I said, widely expected 99.9, if I'm not wrong, or 99, was already expecting the Fed to have no rate cuts, no rate hikes, no changes, all right? So just another pause, and that was exactly what happened. 30 minutes afterwards, we had Jerome Powell giving us a speech, read it out the statement as normal, but then he says that there are a few participants from the board not willing to cut rates this year. And also, there are a few participants willing to cut only one more time this year, okay? So, and that would be in September. Of course, US dollar rose, US dollar source, on this take because that's positive for the US dollar holders, and of course, people looking to invest into US dollar, will be able to basically maintain higher for longer. And that the reason why it was so interesting that it's because basically the Fed was expected to cut 2 more times this year. Okay, and they didn't, and we come to this meeting today and they were like, we only may cut 1 more time, and that's a big problem because basically everything that the market was expecting goes to one side, and the other thing is much more important now, and that's exactly what we need to be following these statements. And as I always say, yes, the rate statement is, of course, it's somewhat important, but what is most important is the statement, the press conference is what Jerome Powell has always to be saying something. One more thing is that they will be data dependent, of course, throughout the next month. The next meeting will be next month in July, is expected to have no cuts again. And they are data dependent. So if we do have the inflation continue to fall, the labor market is still very consolidated in a sense of hasn't been spiking up or spiking down. It's just a little bit higher or as expected or a little bit below the expectation, the consensus. So no big moves into the labor market at the moment, and that's good. I'm not saying that's bad. It's pretty good for the Fed to be able to maintain a consistent rate path until 2020, end of the 2025 year. Now, that being said, there's one more thing as well. There is another tariffs coming over. Okay, so there are another tariffs, another another wave of tariffs coming over, and Trump has made that very clear a few months ago. So next month or afterwards, we will continue to have more tariffs coming over. So it wasn't, it didn't stop. It was just a pause, and now they're coming back with full steam for the continuation of the tariffs. This of course will impact the Fed directly or indirectly, because think about it. They have been planning all of this knowing that was not going to be inflation. And then Jerome Powell was like, oopsie, now Trump is in power and he's putting all of these inflations and, you know, screwed over all our plan. We need to reformulate that and see how the inflation, how the labor market will react. So basically how the economy will react to the tariffs, and then we can come up to a second plan. So that's exactly what the data dependent means for the Fed at the moment, okay? That being said, the tensions are rising pretty quickly into Israel, Iran, and USA jumping in to help Israel, okay? So there is a small chance of that happening at the moment, so just be careful, because if that happens, of course, we will be having US dollar strong, safe haven currencies strong, risk off currencies most likely strong as well, and you know, like Australian dollar, Australian dollar, New Zealand dollar, and so on, we may have them strong, okay? Because it's a risk on, it's you know, the market is risk on, and it's going to be crazy if that happens. Hopefully that doesn't, because, you know, I like a peaceful life, so let's hope for that doesn't happen. Guys, thank you so much. I hope to see you today from 4 to 5 p.m. into the webinar, where we're going to be diving a little bit deeper on what the Fed say, what Jerome Powell say, and how can we progress towards the next you know, end of the next week. We will already be end of the month, so after that with July, and then that's officially the second half of the year. Thank you so much. I see you today on the webinar, or I see you in the next video. Bye bye.